Stop. Don't withdraw money from your life insurance policy. Again, don't withdraw money from your life insurance policy. Why? Because if you withdraw money from your life insurance policy, you're going to be taking the values of the policy down to the line of zero. So think about it. When you withdraw from a bank account, what's happening? Your money is going back down to the line of zero, right? The same thing happens when you withdraw from a life insurance policy. Your cash value, your account value, and your death benefit all go down to the line of zero. And then two things happen. Number one, your death benefit is less than what you started with. Number two, you could be creating a tax liability. If you earned dividends in your policy, if you earned interest in your policy, that's considered taxable income. So when you withdraw that money out, if it's enough, it could trigger the IRS to charge you federal, possibly state taxes on top of what you withdrew. So do not withdraw money from your life insurance policy. Well, then, Rochelle, you might be asking, how can you be your own bank? Think about it. Banks use other people's money to make money. So what should you do? Borrow the cash value out of your life insurance. Again, borrow from the cash value. Why? You're borrowing the life insurance company's money, and your money sits in the policy and continues to grow. Uninterrupted compound interest. So think about it. You borrow $1,000 from your life insurance company. The company loans you their money while your money stays inside of the policy and continues to grow. You have 13 months to pay back the life insurance company's money while your money stacks and stacks and stacks interest on top of your principal for 13 months. Then at the end of 13 months, hopefully you paid back all that you borrowed, so that at the end of 13 months, you have 24 months worth of principal and interest. You have last year's principal and interest, and you have this year's principal and interest, and you also have paid back your loan, so that your cash value is now on steroids. You never lost any of your death benefit. You never lost any of your cash value. As a matter of fact, your cash value grew exponentially, and your principal is still intact. Loans are tax-free. And if you don't pay back a loan, it's considered a part of the death benefit. And death benefits are tax-free. So again, do not withdraw money from your life insurance policy. What should you do? Borrow money from your life insurance policy. Pay yourself back and put your cash value on steroids. For a visual on how to do that, jump on the Be Your Own Bank workshop. Yay! Thursday night at 7 p.m. Eastern Standard Time. See how your money can grow infinitely. But again, Repeat this to yourself. Tell it to your family. Do not withdraw money from your life insurance. Borrow it. Love and blessings. See you later. Bye.